Doing sound technical analysis of a stock should not be hard. It shouldn't take much time to do, and it shouldn't take an hour plus to explain on the internet. In this video, we'll go over how to technically analyze stocks for trading. We'll focus on the stuff that matters. This video will be broken down into 7 parts. Let's dive in. Part 1, the purpose. Why do we do technical analysis? What do we want to achieve? When doing technical analysis, all you're trying to do is find the price levels where buyers step in and where sellers step in. When buyers step in, the price goes up. When sellers step in, the price goes down. It's as simple as that. However, you will need either a large amount of buyers or sellers or a big buyer or seller to move the overall price of a stock. Therefore, you just need a lot of capital to move the stock. This is important to understand. If you trade using indicators nobody uses or a secret proprietary formula pushed by some furu, you're looking at something on the charts that nobody else is looking at. Therefore, how are you going to get the amount of capital you need for the stock to move? You're not. So keep it simple and use technical indicators that are common to the market. Part 2. Time matters. Let me ask you a simple question. If tickets for the World Series right now are at $1,000 and they've been at this price for the last 5 minutes, but before that for multiple days, the price was at $750 a ticket, would you say that $1,000 is as low as they're going to go? Probably not. The amount of time and the amount of occurrences a stock is at a certain price will impact how strong or weak that price level is. And that's why it's important to use appropriate time frames when analyzing stocks. Some traders will use short-term candles such as the 1 minute, the 5 minute, the 15-minute candle. I do not recommend this. I personally use the daily, weekly, and monthly candles. Part 3, momentum. Newton's first law of motion, also known as inertia, states that an object in motion will remain in motion unless acted on by an unbalanced force. This also applies to stocks. Let's go over a recent example I uploaded to the private Discord channel. If you want to join, a link is in the bio. So we're looking at the daily chart for Meta stock. And as of late, we had 2 events where the stock sold off and was oversold on the RSI. Some traders would want to come in at these prices because the stock is oversold. But that's the wrong choice because you got to look at momentum, which is very strong to the downside. Common mistake traders make is that thinking just because a stock is oversold and is down so much from its highs, thinking it's a good buy because it's going to return to those levels. But if momentum is strong to the downside, it's likely you're going to see lower lows and your purchase is going to lose you money. And that's exactly what happened the last time Meta stock sold off, and that's exactly what's happening this time around. Understanding this concept allowed us to identify the trade opportunity, which we posted on the live trade alerts on the private Discord. Part 4, identifying support and resistance levels. Identifying key levels of support and resistance is probably, in my personal opinion, the most important thing you can do when charting. Charting support and resistance levels is a 3-step process. First, I checked the 1-year daily chart and I look for prices where the stock has bounced or been rejected multiple times. You want to see a high number of occurrences to justify that support or resistance level. Once I identified those prices, I'll mark them with a horizontal line on the chart. The line will be green. D for daily, D for dollar, and the dollar is green. I'll do this same step on the weekly chart. If I see a price level on the weekly chart that also coincides with the same price level on the daily chart, I'll change that line from green to white. W for weekly, W for white. And I'll chart any other levels that show up on the weekly chart. And then I'll do the same step on the monthly chart. And I'll change any lines that show up on the monthly chart to maroon. M for monthly, M for maroon. It's important to know which time frame your support and resistance line comes from because time matters. The longer the time frame, the stronger the support or resistance is. The number of occurrences, the stronger the support and resistance is as well. It's also important to look for support and resistance lines at trend lines. Here's an example of a trend line. Notice how the stock is moving in a well-defined channel. The upper and lower limits of that channel will act as support or resistance. Now, once we identified all of these key levels, how do I apply them to get into trades? Most people will just buy a stock when it's at support and sell when it's at a resistance, but that's not what I do. I personally trade options. The support and resistance levels that we identified during our technical analysis will be used to help determine strike prices in the options contracts we choose. I personally look for debit spreads that provide a risk to reward ratio of 10 to 1 or higher. Let's walk through an open trade that I currently have on Amazon, which is up more than 400% today. This trade was also posted on the private Discord. So what I did for Amazon stock is I bought a put debit spread with the $90 strike for the long leg and the $85 strike for the short leg. When doing my technical analysis, I identified two support and resistance lines, and these were on the monthly chart, and that's why they show up maroon on the charts. The first support was at $100 and the second support was at $80. So what I did after I identified that trading range of $100 to $80 is I went to the options chain and I looked for contracts within that range that provided 10 to 1 or higher odds. And what I ended up doing is I bought a contract that is right in that range, between $90 and $85. So what Amazon has to do is it has to act natural with the downward momentum, breaking the support at 100 and then heading towards $80. If it gets to $85 by November 18th, that's when I max out my potential return at 1,000%. Notice how I use those support and resistance levels to identify where the stock could head to, and then I use momentum to see if it's likely the stock is going to head to that direction. Part 5, other indicators. There are two other indicators I use. One is another way to find support and resistance levels, and the other is used to gauge momentum. The first are major moving averages. I personally pretty much only use the 200-day moving average. Now, moving averages will act as support or resistance depending on the overall trend. If your moving average is downward sloping, then it's going to act as resistance, meaning the stock is below the 200-day moving average, and every time it touches the 200-day moving average, it sells off shortly thereafter, and vice versa if the stock maintains above the 200-day moving average. The next indicator I use is the RSI. This is to gauge momentum. Anything over 70 is overbought, and anything under 30 is oversold. Let's walk through a trade that I used both of these to enter into. The trade was on the SDOW, which is basically an inverse ETF shorting the Dow Jones Industrial Average. So when I did my technical analysis on the Dow Jones, I noticed that the index is currently at the 200-day moving average and it was oversold on the RSI. There's also a trend line if you connect the dots at all of those peaks pointing downward. If history was to repeat itself, you could see a sizable decline. So with that being said, we shorted the Dow by buying call options, a call debit spread on the SDOW. That's how I use the 200-day moving average and the RSI combined to identify a trade opportunity. Part 6, trading patterns. There are a ton of trading patterns out there. Most of them are garbage, but there are a few that are good. I mostly only use 7 trading patterns. They include a double top, a double bottom, a head and shoulders and an inverse head and shoulders pattern, horizontal channels, ascending channels, and descending channels. All but head and shoulders are covered just drawing support and resistance lines on the charts using trend lines or key price levels. Part 7, keep it simple. As you can see, the process is simple. It does not need to be overcomplicated. Your chart does not need to be filled with a bunch of lines. You don't need a book of hundreds of trading patterns. Mastering a few steps will go a long way and help provide clarity on your trades and help boost your confidence so that you can control your emotion. Now, when doing technical analysis, I will say that you need to find a trading platform that allows you to properly conduct a technical analysis. There are 3 different trading platforms I recommend. For all users, Interactive Brokers and their trade workstation is good. It's offered in over 200 countries. There's an affiliate link in the bio for Interactive Brokers. Go check it out. For US-based traders who want to be able to trade on the go on their phone and is looking for a trading platform that's a little bit easier to get started with, I would recommend Webull. It's easy, but it's also still quite powerful. There's an affiliate link in the bio that can get you 12 free stocks valued up to $30,000. If you deposit $100 US using that link, this channel will be rewarded with 1 free stock. And then the third trading platform is Thinkorswim by TD Ameritrade. This is probably the most powerful trading platform, and it is hard to understand at first, and there is a steep learning curve, but it's hands down one of the most powerful trading platforms out there. Now that concludes this video. If you have any comments or you just want to show some love, drop a comment in the comment section. Hit that follow, and I'll see you on the next video.